Hi, this is Jeffrey Kerr Financial Group. Today's Monday, July 22, 2024. So we've got, as we look forward on Monday, some of the economic news and some of the things that are on the calendar. The big one this week is going to be PCE, the inflation report. That's on Friday, closely watched by the Fed. So, keep an eye on that. That'll be, influential, likely. Also, there's durable goods, new home sales, and existing home sales. So we'll get some, insight into the housing market, as well as the durable goods. How much people are spending on bigger items. In the earnings, lots and lots of earnings this week. It's a mad rush, but I think some of the important ones, Google, Tesla, and Visa are all, I think, tomorrow. And Google's going to be watched for the ad spend, how businesses are spending money on Google for advertising. Tesla, I think is going to be not great numbers, but it'll be the narrative around the robot vehicle as well as AI initiatives and like that. And Visa, I think, is important. American Express had good numbers on Friday. Visa will be looked at from a credit creation standpoint as well as delinquencies and like that. And kind of on that line, I saw a piece over the weekend about how the traffic at airports is really strong, and that most travel is discretionary. I guess even business travel can be discretionary to a certain extent with Zoom meetings and like that. But a lot of travel is discretionary, is strong, and I think it kind of points back towards the K-shaped economy that I've spoken to before. How the upward sloping part of the K is indicates people are certain parts of the economy very strong, and then lower downward sloping part it just indicates how people are getting hurt by higher interest rates, higher inflation, and not able to take advantage of some of the things going on in the economy. I'll finish up with the yield curve. So if the yield curve is is a picture snapshot of what the various yields are at various maturities. The 2 to 10 year, two to Treasury 2 year versus the 10 year is a big indicator and closely watched. I didn't realize, I've forgotten, 2 years it's been inverse. In other words, the shorter term interest rate higher than the longer term. Not logical, but that's the way it's been because of monetary policy and interest rates and like that. Recently, this 10 year has gotten back up to the 2 year. And so that's a normal sign. But I think the history is this is the longest stretch where that inversion, in other words, the longer yields are below the shorter yields every time that has brought on an economy. I'm sorry, a recession. So this time is the longest one from July 6th of 2022, over 2 years. The second longest one began in August of 78. It was 600 some days. And that, what followed when that became, again, positively sloped were two bad recessions in the early 80s. So we'll see. And maybe this is what, the weakness in the stock market recently is sniffing out, is maybe a recession somewhere out on the horizon. So something to watch. Want to make a point of it. Thank you for listening. Talk to you soon. Goodbye.